Welcome back, everyone. I hope we're all doing fine and well today. So, what we have next week is what I'm able to theme as the Fed week. All right, we have some very interesting data and very scary data come next week. On Monday and Tuesday, we literally have little to no data. As you can see, Monday is actually flat, and Tuesday we only had the job opening coming on Tuesday. However, on Wednesday and Thursday, followed by Friday, we have all those big data. Okay, so you want to get yourself prepared. There's going to be some movement this week. All right, so let me break it down one after the other. All right, let's start with the 2 a.m. data coming from Australia. Literally, we have the quarterly CPI, the yearly CPI, and the trimmed mean CPI. Okay, all of these data are forecasted to literally come as previous. All right, the inflationary data coming from Australia, and this will be coming out at 2 a.m. Nigerian time. And as you can see right here, they are all expected to come slightly higher than previous. As a matter of fact, only the quarterly CPI is expected to come higher than previous. Okay, I mean lower than previous. Excuse me. And now, if this data came or come out to be what was being forecasted, we literally get probably a lower cut. All right, you can see right here, Canadian dollar is actually just finding its movement or its footing slightly to the upside. Last week we saw it very weak, including CAD, and I think GBP is also pretty weak last week. But right now you can see that we're getting a more bullish reading on the economic meter based on all of this currency. We are still going to come back to them later. So, but what I'm actually expecting right now from the Australian data come next week is more like a measly, slow improvement in the Australian CPI. However, if we get something crazily smaller than all of this, we'll likely get a weaker Australian dollar. Okay, and then probably we see here like AUD, USD, AUD card probably crash or probably fall or dump next week. So prepare yourself for that. 1 p.m. we have the ADP non-farm payroll. Okay, the ADP non-farm employment change come in the United Kingdom. Excuse me, in the United States, and it's expected to come quite higher. I think that is quite decent. The same thing for the job opening. I think jobs is expected to actually fall a little bit. So that is something we should pay close attention to. But when it comes to jobs and ADP, I think they kind of set stone. Okay, they set stone for what to expect from the NFP. But right now, I'm not super certain on what this is going to be. So we just have to wait for that to come up. Now, the next data coming on Wednesday is the United States advanced GDP, okay, the quarterly GDP, which is expected to come crazy high. What we have currently is negative 0.5% in the United States. Let's quickly take a look at that. Here is the economic heat map, the US economic heat map. We have a negative 0.5% quarterly GDP. I think should be released in, I think, April. It should be April. No, it was released in June. All right, that's quite decent. Okay, so negative 0.5, whereas the previous was 2.4%, and the market was forecasting negative 0.2%, and we got a very weak or very small GDP, okay, growth in the United States. So now, considering what is being forecasted right now, what is being forecasted, literally what we are expecting is back to 2.4%. All right, I'm not sure we're going to get this number, but possibly the number we're probably going to get will be smaller than this, but probably be higher than the previous. All right, so we should wait patiently to and see how this is going to play out. But I'm not anticipating for anything negative. Probably 0% or maybe 0.1 or 0.5% would likely be what will be coming out for the advanced GDP, advanced quarterly GDP in the United States. So let's pay close attention to that. By 2:45, we have the Bank of Canada Monetary Policy Report, the rate statement, the overnight trade, all the normal banks in Canada, and it's all expected to come just as previous. They're not looking forward to cut rate anytime soon, which is quite cool. All right. The same thing for the United States. Okay, by 7 p.m. on the same Wednesday, the Fed's guys, okay, the FOMC statement, FOMC press conference, the federal funds rate, all of them is expected to come just as previous. Okay, Fed is not still Powell and his guys are not ready to cut rate yet, and we've heard that from the series of press statements. I mean, the Fed statements, the speeches that we've read or we've heard over the past couple of weeks now. So they're not really speaking about cutting rates in July, possibly maybe September or August. Okay, we're gonna probably get some rate cuts then. Well, July is actually out of the picture for them. So let's see how that goes moving forward. So that's more like it in Canada and in the United States. Anticipate for a little bit of a momentum, considering the fact that they're not planning to cut rate, but expect a little bit of momentum. Okay, But if something crazy happens and the Fed in the United States or in Canada ends up cutting rate, or I don't think anybody's planning to hike rate right now, except Japan or maybe Switzerland, Swiss National Bank. If Canada and the United States Fed plan to cut rate, then you will likely see some very decent move. Okay, it's gonna be very crazy anyways. So prepare yourself for that. And then we jump into Thursday. But what another thing aside the interest rate report that you want to look into is the quarterly GDP in the United States. This one would likely not going to be here. It's not going to be 2.4%. It's likely, okay? It's probably going to be below 2.4%, but it's also going to be higher than negative 0.5%. So prepare yourself accordingly for this, okay? And then the Australian dollar also, this data there's a possibility that it's not going to come out this way. Okay, maybe slightly lower, all right, in Australia. So prepare yourself for that as well, all right. So on Thursday, we have the Bank of Japan, the rate policy, the monetary policy statement, the outlook report, the press conference, all of them coming. It's probably going to come around that 3 a.m. thereabouts in Nigerian time. So prepare yourself for that. As a matter of fact, they're also not planning to cut rates yet. Okay, it's still forecasted to come 0.5%. So, which is previous. So that is quite cool. However, if anything happens with the Fed fund rate in the United States, or maybe BOC monetary policy statement of the overnight rate, if anything changes from their own perspective and they end up cutting rate, they might expect Bank of Japan to also follow suit. So whatever happens with the Fed fund rate in the United States will likely set the ground or the ground rules for what the Bank of Japan will also do. All right, they are not planning to cut rate yet. You already said it a couple of times, but if power fall under pressure, the Trump cut rate pressure, and the end of cutting rate, you will likely see Bank of Japan also hiking their rate as well. So prepare yourself adequately and accordingly for that. By 1:30 p.m. on Thursday, we have the core PCE price index, the employment cost index, and the unemployment claim in the United States. Okay, all of these data also is forecasted to come measly with a very small difference from what is been released the last time. So just watch out for it. I'm not really certain on how the core PCE is gonna change anything, honestly. Okay, it looks cool, but I don't see it changing anything for now. But unemployment rate, the unemployment claim would likely make some moves because that's what we set stone for. It's a weekly data, so just prepare yourself for that. Anyways, I don't really see anything moving in the market on Thursday, especially in the United States, aside the Bank of Japan data that will probably move USD JPY and other yen pairs come Thursday. All right, and then Friday we have the NFP. Okay, average hourly earnings, NFP, unemployment rate, and the whole shebang is coming on Friday. This Friday is going to be very, very dicey. Okay, and you can see the average hourly earnings is expected to come up by 1%, by 0.1%, excuse me, which is quite cool if you ask me. Okay, the non-farm payroll is expected to drop from 147k to 108k. That is crazy. If that happens, or maybe we get a lower number, maybe around 95k, or maybe 85k or thereabout. That's not going to be good for the dollar whatsoever. Okay, that would be very, very crazy for the dollar. So we have to wait and watch patiently for that. And lastly, the unemployment rate is expected to come higher also. All right, it's expected to come higher. Although in the United States, okay, the weekly unemployment claim, okay, the initial jobless claim has been quite good. It's been decreasing so far. Okay, but let's see. This month data is forecasted to come higher. All right, so let's see how that goes. By Thursday, that would also help us understand how the unemployment rate will go. Is it going to stay at 4.2% as expected, or probably come out as what the previous was, which is 4.1%? All right, I'm not really sure on how this. Nobody really knows what is going to happen, but we can all anticipate and forecast for it. All right, but this is what we are expected this week. All this data actually look good for the dollar. I'll tell you that. Okay, the GDP growth is forecasted to look very good. Okay, it's not even forecasted to look very good. It looks very good. What's been forecasted looks very good. All right, where is GDP again? Yes, this one looks very good for the dollar. FOMC Fed holding on cutting rates. Okay, they're still staying off from cutting rates. Not buying the Trump administration. Pressure looks very good for the dollar. What other things? All this PCE data. Okay, the PCE, the employment cost, the unemployment claim also looks very good for the dollar. If they come just as expected right here, if they actually come just as forecasted right here, okay, they all look very good for the dollar. Although on Friday things are looking very dicey with a very low print on NFP and a higher print on unemployment rates and a higher print on average hourly earnings. Okay, we have a good labor market so far. It has actually been the only thing that's been keeping the dollar going for a very long time. But we get 0.3 point on average hourly earning or something higher than that, maybe 0.35 or thereabout, or maybe 0.4, all right? And we get a lower print on NFP and a higher print on unemployment rate. That would not be very good for the dollar, all right? So this would be a mixed data. However, with the kind of moves that we would have gotten from Wednesday and Thursday's data, FOMC, the quarterly GDP, and the inflationary data right here, okay, the core PCE and the unemployment claim and the rest. Okay, if we got all these things right and they come higher than expected, and this come out to be like this, maybe NF becomes quite bad. Yeah, the moves will more probably just keep everything on average and probably see up and down. I mean, a whipsaw kind of momentum and everything just like that from there. So, but anyway, what you can get, what is guaranteed come next week is that there's going to be some moves. We don't know how it's going to play out, but the move is expected to be very, very dicey. So prepare yourself for that. I think I spent enough time covering the forthcoming economic calendar. Let's take a look at the economic surprise meter before we now jump into the chart. So right here we have the United States dollar at 62% strength. It's pretty strong considering the data we expected to come out next week. Okay, GDP also at 50% neutral. Euro at 80% strength. Japanese yen at 57% strength. For 3 weeks now, this one has been 57% strong. Okay, it's not bad at all. Okay, NZD from 100% because of the job data that we got last week. Also, I think the unemployment data we got last week, more like the labor data we got last week on New Zealand, actually took it from the top of from 100% to 88%, which is still leading the pack. Okay, because it's staying above euro and it's staying above CHF, which is around 80% strength. We have Australian dollar at 57% strength, and we have CAD at 43% weakness. So far so good. Only CAD that's staying below 50%. So far so good on all the 8 major currencies. Okay, so that said, plan yourself accordingly for this as well. And when we take a look at the top setup on Netfinder, right here you will see that we have Eurusd as bullish, and that's more like the only bullish currency and Euro CAD also. Okay, and both of them are not even on my watch list at all. Okay, they are not there. What is on my watch list this week are more like technical base. Okay, but we have Pound USD. Okay, one of my top setup. I have a trade on Pound AUD, a short trade on Pound AUD. I'm looking for short on Pound CHF for now, but it's not looking very good. Pound NZD also is very bearish with a negative 12 score. We'll probably talk about this, but the pair is actually ranging for the past 3 to 2 months now, 2 to 3 months now. So nothing really dicey over there unless you want to trade it. You want to sell the top, sell the top, sell the top as the market ranges. Okay, but if you break below the structure, pull back, yeah, I'll trade the breakout setup on it, and I will probably be selling it. Right, so pay close attention to Pound NZD moving forward. So that said, let's jump straight into the chart real quickly. Let's start with the DXY. So what do we have here on DXY today? DXY did make some very demanding move last week because it dropped. Right. The week before last, we saw a very serious move to the upside, which I call this zone my neutral to bullish zone. Okay, my neutral to bullish zone. And the next step I was expecting after we got this very nice break of this particular monthly trend line, I would say it's more like monthly. All right, we got a very reject from all the returns that we've gotten from this particular trend line. Okay, it's been rejecting very nicely. Then a week before last, we got the first break. I mean, the first week in July, we got the first break above this particular region. Then the second week, we got it move way higher to this region right here, which was nearing the 99.00. Let me just say $99 zone. And last week, what we got was quite annoying. I would say that because I was quite, don't forget what I said earlier. I said I'm pretty bullish, okay, neutral to bullish on DXY. The fact that it broke above this 97 zone, okay. Now, it got to this region at 98.50 and then it got rejected all the way to the downside. Got rejected to the downside. I think this started happening on, I think this should be Friday, Thursday, yeah, Wednesday, Tuesday, and Monday. It started immediately on Monday. Okay, Monday happened, started dropping. It dropped for 3 days straight. That was crazy. Monday, Tuesday, and Wednesday. It's not easy. So this happened, and then Thursday and Friday we got a pullback. Okay, pullback to the upside, which means that this particular zone right now got destroyed to the downside. Okay, I was expecting maybe we're gonna get more like an inverted head and shoulder right here, which is still part of the play. Okay, it's still pretty much like head and shoulder because until this particular bottom is broken, this 96.50 region is broken to the downside like this, we still have this inverted head and shoulder, just that the right shoulder is way deeper. to when we compare it to the left shoulder, right? Technical analysis. Okay, don't blame me. That's how we were thought. So now moving forward, if we get a reject from this place and the market move up like this, anything above this 97 zone, I will still be what? I will still be neutral to bullish. All right. However, if we break to the downside, made a nice and decent pullback, then I will return to being full but bearish on the dollar index, and I'll just keep it locked down on that region. Okay. So let's just pay close attention to this. Something might let go and something might happen anytime soon. But pay close attention to DXY and also pay close attention to the data come next week. I've already discussed it. Okay, the data you want to pay close attention to the most is the advanced GDP, the advanced quarterly GDP on Wednesday. And then we have the FOMC statement also, the FOMC report, the full Fed funds rate, FOMC statement, FOMC press conference. All those things you have to pay close attention to it. As a matter of fact, if the data comes as expected, 4.50%, what you want to now watch out is the press conference, because that is when the press people, that's what I call them, they will be grilling. Let's not allow them grill Powell right now. Okay, they will be drilling Powell. So during that time, it's gonna be saying some stuff. It's gonna be saying some things. It's gonna be revealing some nice and decent information that will be very, 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 very important to the market. So you want to pay close attention to whatever it seems and how it impact the market, because that, especially as a day trader, that can impact your trade one way or the other. Or just stay off the market altogether. All right. On Thursday, also 1:30, you want to pay close attention to the inflationary data, the core PCE. Okay, you want to watch out for what is being released. Okay, it's expected to come slightly higher than previous, so pay close attention to that. All right, it's going to be very, very interesting. And then we have the employment cost index and unemployment claim, also slightly expected to come. The employment cost index is expected to come lower than previous, and we have the initial jobless claim expected to come higher. All right, so this is also very dicey, and it could move in different ways. Okay, if unemployment claim, the initial jobless claim comes higher, that's not good for the dollar. If it comes lower, that's pretty good. And the employment cost index, the quarterly employment cost index, if it comes lower, that means the big guys, the people, the employers, okay, they are making more money because they are paying less to their employees. Okay, that employment cost index, the quarterly report that comes out from that, it's also more like a labor data. Right, and then on Friday, you know, the usual the hourly earnings, the non-farm payroll, the unemployment rate, and the ISM manufacturing PMIs. Okay, so this data is expected to actually come quite decent. Okay, it's also mixed. We have the average hourly earnings expected to come higher, which is good for the dollar. Okay, non-farm payroll is expected to come lower than previous, not good for the dollar. Unemployment rate is expected to come higher, not good for the dollar, and the manufacturing PMI is expected to come higher, good for the dollar. So Friday is going to be very dicey as well. So all we have now is advanced GDP forecasted to come higher. We also have the Fed fund rate, which looks very good. So we have this on Wednesday. We might actually see a stronger US dollar, all right. And on Thursday, probably a sort of rickshaw up and down. And then on Friday, it's going to be very crazy. Okay, so I can't really say what is expected to happen on Friday. Well, let's just wait patiently to see how this goes. So that's that. And the GDP, the quarterly GDP is also too perforated. It's too high. 2.4% forecast is way too crazy, considering where we're coming from, negative 0.5%. So maybe they just, I don't know the plan on this one. Okay, we're probably going to get a higher reading, a higher than previous reading, but I'm not sure we're going to get a higher than forecast reading. Okay, or let me say point on this particular GDP. So it's crazy. It's crazy. 2.4% is crazy. I mean, I would have forecasted 1%. Okay, let's start from there. But going all the way up to 2.4%, sometimes you wonder, who are people forecasting these things? All right, but what can we do? That's the best we can. So pay close attention to DXY, please. Okay, it's going to be very, very, very interesting come next week. All right, but personally, what I'll be expecting, honestly, right now, I would say whatever happens, I'm fine. To be honest with you, if it's going to be stronger, maybe it's going to come back to the upside right here. I'm good. It's going to be weaker. It's going to fall. It's going to fall down to 98. I mean 94.50, 94.60. I don't care. All right, whatever happens, I just want to watch, wait, take some very intraday trade, and just stay off the market next week. Okay, so that's the plan. Now let's talk about my open position. We have CAD JPY. I'm still buying. Looks very good. Okay, it looks pretty good right now. Okay, I'm already trailing this one, and my trailing stop is around 106.54. So that's where I'm at right now on CAD JPY. NZD JPY also, I'm buying. Looks very good. I actually have two positions on this one, which has been mixed together. Okay, so I have my trailing stop at 88.05, not bad at all. So that's that on NZD JPY. The BTI, I'm still holding a drawdown bag on this one. So still holding this one. It's been over a month right now. I took this trade on Tuesday, June 24th, and I mean it's over a month now. So that is that. I'm still holding on to it. I'm literally paying nothing on this one. No swap, nothing. Honestly, it's zero. So that's pretty cool. So it's my stop loss just there. All right. NZD dollar I'm buying, which it looks very good the first hour when I joined the trade, but right now it seems it's pulling back. So what happens to dollar is going to affect this thing. But if we get a stronger dollar, it's not going to be very favorable to this trade. But a weaker dollar, yeah, maybe we're going to get a very good move on NZD dollar. So if you plan to join NZD, I would advise you to just wait for a break above the stop right here. A break above that 0.6090, okay, 0.6090, just watch out for that. I mean, excuse me, 0.5990, okay, watch out for that. A break above it, a pullback, yeah, you can look into buying NZD dollar. As you can see right here, we're having more like a range band here, okay, a range band. There's a false breakout right there. So we might likely see a break above there if dollar ends up in super weak come next week. But let's just pay close attention to that. NZD looks very good. Now, okay, I'll probably add to that trade if it breaks above that 0.5990. To be honest, pound Aussie, I took this one on, I think on Monday. No, on Tuesday, 22nd. So it looks very good. I'm already trailing this very tightly though. Like my stop loss at break even right here. So it looks like a very good trade to me. We get a break below this particular one. My first target will be around this region right here. Okay, this particular high, we should be around that 2.002. Okay, that point 2.00 whatever. All right, around that region. That will be where I'll be targeting first. Then if we get a break below this region right here, yeah, I'll probably add to the trade and then see if we can target this particular bottom at 1.9, 1.90, let's say 1.99500. Okay, around that region. That wouldn't be a bad place to target. 1.5, I mean 1.99500. That would be my next target by the bottom there. So pay close attention to it. Might work out, might not work out. All right, but for now the trade is doing very well. I took a buy trade last week on gold. Told you I'm expecting some pullback, and the pullback did happen. Excuse me. Took the trade somewhere around there. The first one I took was right here, and I closed it quite early. Now I took another one on Friday, I believe. Yeah, on Friday, and so far so good. Looks quite decent. So now gold, you might see gold actually come all the way down here. Grab some momentum there. All right, or liquidity, whatever you want to call it. I move to the upside. But for me, before I can turn bearish on gold, I would likely see, I would love to see a break below here and probably come back to 3.315, okay, 3135, 3135, which will also fall around on this particular key level, so to speak. All right, so that would be it. But anything above this particular region, which is at 3.250, I mean, let's say 3250, all right, 3250. This is the crazy thing about trading forex and gold at the same time. All right, you get to mix them all together. So anything above 3250 on gold, I will still be looking to buy gold moving forward. Okay, when we saw this jump, you would have argued that probably we're never going to get this pullback. All right, but we're getting it right now. So it might be a pullback or it might just be a sell-off. All right, like gold will just crash all the way to the downside right there. Nobody knows, but let's see how it goes for gold. All right. Now, talking about my trade recommendation, let's start with pound USD. Yeah, as far as pound USD is concerned, it's more like it's finding it very hard to move up. All right, find it very hard to move up. So you've got this eye at 1.3780. All right, so you've got this eye right there. It's been very tough for pound to probably top it, considering what we're seeing on the pound economy. As you can see right here, pound is at 50% neutral, which is not very positive for pound trader. I would say it's not looking very good right now. However, a break below this region at 1.3400, okay, 3400. A break below this region would likely lead to a further sell-off on pound USD. Okay, maybe to this region at 1.2700. All right, that's just an idea. However, if it fails to break below this region right here, if it fails to break below this region right there, let me do this. Yeah, if it fails to break below this region, what's wrong with my mouse? Failure to break below this region right there at 1.3400, then we'll likely see a reject all the way back to the upside. All right. So stay cautious on this one. This might be a trade you want to take on, maybe 1 hour time frame, so to speak. Right. But watch out for this particular region right here, 1.34400. Right. That is a very good place to anticipate for a good buy. And if it break below it, I want to look for a short opportunity all the way to the downside. That's going to be my plan on pound USD. On euro dollar, as my second trade recommendation, I would say a buying opportunity is still very much active. Okay, we've got the trend line which seems to have been broken right around there. Okay, however, we got a nice and decent break above this flag pattern as well, which kind of like changed my bias on the short opportunity that I was expecting on euro dollar. So right now, if we get a break above this 1.8299, I guess. Excuse me, that's not it. That's gonna be 1.1829. Yeah, that's the particular all-time. I mean, the current high or this year high, the 2025 high on Euro USD. So if we get a break above it, I mean, sky is the limit. We can actually get 1.9 on Euro USD or 1.19, so to speak. Okay, on Euro USD. So watch out for Euro dollar. Okay. However, if we get a stronger DXY come next week, we'll likely see a break below here. Right. Based on how strong dollar is this week, we'll likely see maybe a retest of this particular region. I'll end up 1.160. Maybe see market bounce back to the upside from there. Right. Or if the strength is very crazy and super big, we'll probably get a break below this region right here, pull back, and then maybe a further sell-off back to this demand zone around this region, which is 1.1120. All right, so that will be it on the Euro USD. Pay close attention to it. Bitcoin is bullish. Last week when I was the video I recorded of the analysis I gave on Bitcoin last week is wait for 50% Fibonacci to be tested, then look for buy opportunity. I did take a buy right here last week, but I got closed out on a trailing stop. All right, planning to take another buy on Euro on Bitcoin if I get it. If I don't get it, I would likely leave it alone. But if I do get it, I'll probably take a buy on Bitcoin if I get a pullback. Though. Maybe, just maybe. Right, we have a buy opportunity there, and the further opportunity to buy again is when the market comes back to test this key zone right here. Okay, when it turns this resistance into support, we might likely get another push to the upside of Bitcoin. So watch Bitcoin out very clearly. As a matter of fact, if it comes back to 100k right here, also there's still some buy opportunity around there. Okay, but anything below 100k, yeah, that would be Bitcoin leading to a pullback. Okay, a deeper pullback because then 73k is in deep. So anything outside of that, I'll look for buy right here. 100k is a shy buy. Okay, like a C plus buy. So you might want to watch out for it. But this is A plus and this is A. Okay, but this is C plus. So if you're into that, you can look to buy Bitcoin right here, and right here. If you can get this level. Okay, I'm not sure it's gonna be next week though. All right, but this can happen next week. This too can happen next week. But this place, unless some people just kind of like close their position on Bitcoin, they're probably gonna get that sell-off. So here we are on silver. Silver also dropped last week, which is very good. So I was expecting this a very long time ago until I stopped and I joined the buy on gold. But right now, maybe we're gonna get a push to the upside around that 57.50 on silver, and we're going to target $40, so to speak. But for now, doesn't look like we're not going to get it. At the same time, doesn't look like we're going to. Well, we've seen this happen before, that the market just has some momentum, grab some liquidity right here, and then fly to the upside. Right. However, before I can take this one, I would like to see the market come back to this region. Okay, turn this resistance into support, the same way it did it right here. And we see it probably cover some of this gap as well. Okay, then we see it move to the upside and move forward. Okay, that's a possibility. We also have some gaps here also. So maybe I can get it down to this region and then another buy opportunity. Or just wait for this one. Okay, if you're a small account trader, this might not be the best trade for you. But if you have a decent account size, then you want to look for buy around here. And the market drops down again, you want to look for buy around here. And anything below here, you want to take your loss going forward. But there's a high possibility that we're going to get $40 of silver before the end of this quarter, potentially. All right, not a financial advice, anyways. So let's pay close attention to that on silver. Usdcad ranges last week. Okay, I mean since the 15th of this month, it's been ranging. No, I mean since the 15th of June, it's been ranging. To be honest with you, okay, as you can see, low high. We got a fresh low right here. Okay, not a fresh new low, just a retest of this particular range right here. So the Btcusd has been consolidating, and when it comes to Usdcad, it can consolidate for months on months. Okay, it loves to consolidate. The same thing happened right here. Don't forget. Okay, this was from December 2023 all the way to December 2024 all the way down to around April 2025 right here. This is a massive consolidation right there. So we might see the same thing right here. Maybe this one will consolidate at the end of the year. Who knows? So just watch this very closely. Now, I want to trade this on 15-minute or 30-minute time frame, and you make some big profit. Just sell the top and buy the bottom. Sell the top, buy the bottom. Simple stuff. But watch out for all these kind of weeks, okay? All these crazy weeks right there. Watch out for them. And if you can avoid that, then you probably do fine moving forward. That's what I have on Usdcad, okay? But let's go back to Usdcad just for a minute. If you get a break above this region, okay, this trend line is broken. This particular support on resistance region is also broken, right, to the upside. Then you might want to look for buy opportunity. You get a candlestick that makes absolute sense right here on the daily back. I want to look for buy opportunity on Usdcad moving forward. Anything outside of that, just play inside this range, okay? Just look for sell, and top, okay? Probably a buy, the bottom, and you avoid all those tiny little wicks, okay? And you'll be fine. That's my plan of Usdcad. AUDCHL, which is the last trade I'll be recommending today, it's bearish, all right? Bearish. That's what I see on AUDCHL. As a matter of fact, AUDCHL has disappeared from here, which is quite weird. But when you take a look at the economic surprise medal, you see that we have 57% strength in Australian dollar, and we have 80% strength in Swiss franc. So that is a big difference between both currencies. So pay close attention to a short opportunity on AUDCHL. Right, especially if you can get a retest of this particular region at 0.5296. Okay, you can get a retest from this particular region all the way to the downside, or maybe a deeper pullback all the way to this 0.5369 or 5370. All right, you can get a retest of this particular region right here. Then you can look to short AUD/CHF altogether. Okay, 0.5360 or 0.5290, okay, 5290 or 5360, okay. Don't forget 0 point. Right, you can get all of them. You can get the retest here or here. Look for short opportunity. As a matter of fact, this is a good trade for small account trader, to be honest. Okay, this is not a wild pair. It ranges most of the time, and if you know how to really plan yourself very well, you can easily trade this even on 30 minutes after. So that is that for me today. Please do have a fabulous day ahead. We'll see you in the next one. Have a good day. Bye for now.